Hi, welcome to the Market Alert for Thursday, the 18th of November 2021. So yesterday's news, inflation hits highest level in a decade at 4.2% as fuel and energy bills soar. We actually have noticed there's a trend here. If I just go back a day, and you will see that we've gone from 3.1, 3.9 and 4.2. Well, that was obviously the forecast was 3.9, but beyond this as well, which is interesting. Talking of inflation, Janet Yellen faces the nation and lies about inflation. She's trying to say that it's still transitory, but then forgets that the demand that was created was because of the Fed's stimmy checks to people during the COVID pandemic, which has resulted in it not being transitory. And then under the spotlight again, two Fed presidents hit the alarm over the broken Treasury market. And I love this, which they actually caused. Absolutely spot on again. Meanwhile, news for today, we haven't got a lot. It kicks off at 1:30. We've got the Philly Fed on unemployment claims. Then at 2:30 and 7 p.m. we've got another couple of minor celebrities from the Fed who will be speaking. Now, speaking of the bond markets, I just wanted to bring this to you where we've got the broken Treasury market. If you want to see more in-depth information about this, and take a look at John, I think his name is John Titus' website. It's called Best Evidence, and it is absolutely brilliant. This man spends months and months putting these videos together. The detail is quite staggering, and the analysis that goes with it as well. So if you want to have a look at this, he talks about the bond market going all the way back to 2008 crash and the impact on the demographic. I suppose if you divide it between the 1%, the 90%, and then down to the working classes and the impact it had, and how the hyperinflation is going to impact on them as well, is very, very interesting. I think he's doing a 5-part series, and this is the start of it. This is the first one. So if you're interested, have a look. Well worth it. It's 42 minutes, but it's better than watching anything else or any other dross on the TV, i.e. soap operas, because this is a real life soap opera that we're seeing unfold here with the Fed and the manipulation of prices. And speaking of manipulation of prices, let's have a look at the stock markets. Will kick off with the Dow, and you can see yesterday the weakness continued in this market down to the 62% retracement in the daily chart, where the market found support, and also obviously the support came in a few days ago here. Market struggling to move to the upside, but overnight prices looking like they're going to head back to the upside. Got to do anything they can to actually bring this market back up. Certainly weaker than the DAX at the moment, which we'll see in just a moment. But if you look at the 30-minute chart for yesterday, you'll see when the Dow opened, it was already struggling with the 200 MA, did trade through it, and then was slammed to the downside, managed to trade sideways, as we can see here, until late on, and then the markets are moving down on the overnight to yesterday's low, which we can see here, and is managing to now move back to the upside. It will need to close above the DP or trade above this and the 200 MA if prices are to move higher. But given that there's not a lot of news today, they will endeavour to do whatever they can to bring this market back up to these levels. And meanwhile, in the German DAX, we've had the fourth consecutive high for yesterday, all-time high that is, at 16,283, and it's looking like we're going to get another one today as well, with the market poised already and determined to break through the high that we saw yesterday. This high, of course, previous day's high at the moment, because of the consecutive all-time high, is the all-time high, even though it doesn't state it on the chart. Something I could add to the software actually, instead of just putting the high, it's the all-time high if there's nothing else to the left in the daily chart. So yeah, we're above the close of yesterday at the moment. We found support at the DP, and you can see where they've bought back in at these levels as well in order to bring the market back. So I suspect that we're going to see the market move higher when the futures opens in 15 minutes. Yesterday's session, it was a very narrow range, but despite this, nobody wants to sell. because the market was free from the start, as you can see here in the futures market. Then we had the cash market open. They tried to sell initially, but this was then reversed in the following bar, and the prices brought back. They did throw in a bit of selling pressure here at this BRN, but eventually we broke, and the market traded up, made another new all-time high. This was an all-time high, this was, and this was. And then as the market traded through the morning, you can see that by the afternoon we traded within a few ticks back to the all-time high that was achieved in the morning, and then prices drifted lower back to the BRN, which you'll see there. Overnight, this is at just after 9 p.m. As the Dow finished, the market gap lower. And then overnight, again, you can see that we've got a bit of weakness, but don't despair. All of you bulls out there, along with the central banks, they managed to bring it back above the DP level and the 200, and now we're looking ready to move this to the upside and take out the overnight high with, I would imagine, with no problem, given what we've seen over the last few days. It just doesn't want to go down, does it? As much as all of us can see, there's absolutely no rhyme or reason for this whatsoever. We know that it's manipulated, but if you're going to make money, you've got to trade what you see and not what you think should happen, because trying to go short in this sort of a market, you will basically just bleed to death slowly as the market goes against you. Until the trend changes in the bigger time frames, then you have to trade with the upside. Otherwise, like I say, you're going to find it very difficult. You'll only do it a few times, because it's like standing in front of a high-speed train when the market's moving to the upside and you're trying to short it. It's just going to go straight over you and continue to move to the upside. And you can see just by the price action here, it's already poised to want to move to the upside as the market starts to get going. I mean, you think with the Dow being 200 points down, you wouldn't be seeing this. If you look at the 30-minute chart, you can see already they're trying to bring it back. And all we need is the Dow to come back, because it's been down to the 62% retracement, found support. We know this is a crucial area. They won't want it to go below this. They're going to try and do whatever they can to bring this back to the upside as well. That's how it works. And there's your I'll just do that again, it's in the wrong place. From there down to there, you can see where they'll attempt to bring the market back in the Dow. If the Dow comes back and the DAX is already stronger than the Dow, then the DAX is going to accelerate to the upside once more, is the theory. Of course, we're due for a correction in the market, there's no doubts about that. But at the moment, nobody wants to sell into it. They just don't want to sell. They're all on the buy side, as we can see here. We've had the odd couple of days, and this is an interesting pattern, actually. It's something I observed yesterday in the intraday, where you will get a couple of bars that are red, and then it will switch back and the trend will resume to the upside. So it's just profit taking before they move it back. Now, whether it's genuine buying or it's just the algos and the high frequency programs just moving the market, I suspect the latter, because given the fact that the volumes are dire in the daily chart and in some of the smaller time frames, it's just the algos moving the market to the upside at the moment, until they get instructions from the central banks to sell, and we get fair value coming back into the market, which, or price discovery, we'll have to wait and see. Meanwhile, in the metals markets, the silver market managing to move to the upside again yesterday, but that 200 MA, the 89 and the 26, a bit of an issue. The most important one here is the 200 MA. They're not going to let it go above this if they can help it. As I've said before, silver technical traders want to see the market back above the 200 MA. In gold, also sideways, as you can see here, at that 78% retracement. And yesterday, the dollar moving to the downside, but finding its feet overnight to move back to the upside, which you can see here, coming off yesterday's low at the moment and above yesterday's close. Close back above the DP will put pressure on silver and move it lower, as we've seen overnight. But if we have a look here, you can see what they did. They slammed the price back through the 25 on the Asian market. They've brought back in here because the volume is as great as the previous bar. The range is narrower. We then get a retracement and they move the market back to the DP area. You'll also note the S's above here and also the D's below here, and you can see how these actually highlight the sideways move, where you'll see again the algos or traders actually selling at certain areas and then buying back, and that's what forms a sideways move, is the supply and demand in this. If you didn't have the supply and demand on, you just say, well, it's trading sideways, but you wouldn't know why. So this new volume tool, supply and demand in the software, highlights this automatically, and it's fascinating to watch it unfold as well in real time. So there we go. That's the current picture of everything that's going on at the moment. So we'll see if the DAX can manage to move to the upside. It's looking very much like it at the moment, certainly initially, even if it fails to hold at yesterday's high. But if it trades up to it, I suspect that without any decent news, then you're probably looking at the market blowing out in this area, finding a bit of a struggle there. Okay, that's it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.